Today, the stock market was rallying up higher, and it was today nothing more than a trap. We see Nvidia was up 12.9%, but after hours, look at ARM. ARM spikes up only to come back down, and right now in after hours trading, it is down 7.89%. Earlier today, I saw the fear and greed index move all the way back over into greedy territory. Now after hours, it's starting to swing back into neutral territory. Let's not forget, right now we are in the midst of earnings season where we have Meta, ARM, Qualcomm after hours today, and tomorrow is going to be another big one as well. After the bell, we have Amazon, Apple, Intel, just to name a few. And when we look at the expected movers out there, we can see ARM is expected to move plus or minus 12%. Etsy is supposed to move plus or minus 11%. Meta and Qualcomm plus or minus 8 to 9% or more. Now that proved that today was nothing more than a trap being set. Keep in mind, we saw stocks like Nvidia getting crushed only to come roaring back today, up 13.38%, and up after hours, up another 1.68%. We've seen Meta recently on the way lower, and look where it is after hours, way above the gap that we had over here. And then after hours, Meta is up 5.51% on the session. We take a look at SMCI. SMCI was also up 5.3%. We take a look at the dollar index. Dollar index was sliding lower today, down 38 cents on the session. We take a look at the 10-year yield on the move lower once again. Papa Powell came to the rescue, saving the bulls in the market, and had a little bit of help out here from the BOJ. Last night, the BOJ basically increased the rates for the yen. As we woke up, the dollar yen was down substantially, which was a benefit out here in our markets. If we look at how the indices fared today, the Dow was up 99.46 points. The NASDAQ was up 451 points. The S&P 500 up 85.86 points, and the Russell 2000 up 1.29 points. We look at advancing issues versus declining. We had 68% of issues advancing for the day. And then as we come over, look at the sectors, almost every sector was in the green, but look who was leading the pack. Technology leading the pack by a bunch. And the sectors that were down were not down a whole lot. Consumer defensive down 0.16, healthcare down 0.02, real estate down 0.41. So overall today, if you were a bull in the market, it would have been very hard not to make any money out here. Now, as we come over and look at gold, gold had a nice bullish day as well on the back of a weaker dollar. And look, gold most certainly looks like it wants to challenge the highs. And we're going to see, will gold be able to make it all the way up here, completing the ABC pattern up here at 2586.2. This is where I think gold is headed in the short term, and we'll see if indeed gold can make it all the way up towards those prices. Now we take a look at crude oil. Crude oil today, a very bullish day out there for crude oil. Crude oil up $3.73, up 5% on the session. Massive bullish candle out there. Now, this is not good for us, the consumer at the pump, nor is it good for inflation when crude oil is going higher. But you know what? Jay Powell really does not care if we're going to make it to his 2% target. Jay Powell and the Fed are bent on lowering rates. And let me know in the comment section down below, do you guys think the Fed should go on an aggressive rate cutting campaign, or is it too early to start cutting rates? Just as a friendly reminder, remember, every time the Fed has went on an aggressive rate cutting campaign, it has not ended well for the stock market. We have seen major corrections over time, but if you look at this chart, what happens? The market still always goes up over the long haul. Now, if we look today, Powell says interest rate cuts on the table in September if there's more proof inflation is slowing. Now, the whole article is BS. Jay Powell and the Fed has already made up their mind. They are going to be cutting rates out in September, and the market has already sniffed it out, right? The market's been pricing this in for quite some time. There's an 85.6% chance the Fed will be cutting rates in the September meeting. And keep in mind, if the Fed were to disappoint the markets, that would not look very good for the stock market. It would be going down drastically right before an election. So let me know, do you guys think the Fed lowering rates in September is political, or do you think it's the right thing to do based on data at this point? Now, as we look at the Russell 2000, it formed a very bearish candle today. Big wick on the way up, overthrew the recent highs, bam, closed right back down. Now, the Dow had a very similar candle as well, a shooting star candle, but the Dow was unable to get above this recent high. Dow came right into the structure area where we'd expect some type of reaction in the market. And that's exactly what we saw today with the diamonds. Diamonds wicked into it, boom, slammed right back down. Now we got to ask ourselves, is this going to produce a lower high in the market, or are we going to see the market come right back up to test the wick and potentially overthrow all-time highs? Then as we jump over and we take a look at the QQQs, what do we see? Big bullish day out there, and after hours, the Qs are up another 0.3%. The Qs were already up 2.96% on the session, and this gap right over here looks very, very enticing. Let's not forget, we actually have two gaps above us, and we're going to see, do those gaps get filled before the gap from today? On the 4-hour chart, you can see the MACD indicator just starting to cross to the upside, but we produced that gap lower this morning. That could be a problem. On the 1-hour chart, you can see the MACD indicator well above the zero line. Then as we dive over and look at the 30-minute chart, here's the area that we mapped out this morning. I was hoping the market would get down here, we could find a buying opportunity and rally it back up. Well, you know what? The market said, nah, we don't want to go down to those lower prices. We've been low enough. And you can see we're trying to make a run right up here towards gap resistance. Now, tomorrow, I do expect we'll form a D as in dog shape profile. Now, I actually classify today as a P as in Paul. Even though the profile shape may look like a D, I'm going to include this invisible part of the profile you can't see and say this is a P as in Paul. If we break value area low, we're likely going to explore the lower third of the range, and more importantly, kind of into that minus development area that we talked about in this morning's video. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, when we come over and we look at the futures markets real quick, notice where we came to today. We almost made it right back to that structure breakdown point. We didn't quite make it there, but we came awful darn close. Now, if you look at this, this has been a very straight move on the way up. 923 points without a single pullback on the 4-hour chart. Now, is a pullback warranted at this moment? If we do get one, I do want to pay very close attention to this minus development area within the weekly profile, somewhere about 19,408.25. If we get down towards that area and we start to see signs of rejection on the way back up, that's where I want to go ahead and jump back on the long side, see if we can come back up towards this structure breakdown point and maybe start working our way all the way back up towards that untested point of control at 19,962. Now, as we come over and look at the daily profiles, notice what we did after hours. Big wick on the way up, boom, we came right back down below value area high. Now, value area high will come in at 19,565.75. The point of control will come in at 19,472.25, and value area low will come in at 19,364.25. So how do I want to handle this? One, if we're trading below value area high, I want to look for the rotation down towards the point of control. I want to look all the way down here towards value area low, but be mindful, all right? We have a little minus development area right here at about 19,408, which matches up with that minus development area that we talked about on the composite profile just moments ago. Then if we do break value area low, we want to be very mindful of this area right here, this minus development area. And let's not forget, with a P as in Paul shaped profile, if we break value area low, that lets us know that we are highly probable going to explore the lower third of the range. And I kind of like this minus development area right down here for that. I'm going to go ahead and mark that out on this chart. That's going to be anywhere from the ballpark of 19,170 to about 19,119. So that would be an area that if we do make it down there, I would look for the market to possibly hit this level, then reject up and out of that area. Now, as we come over and look at the SPY real quick, what do we see? We have a little bit of a wick on this candle. Now, after hours, we are up a bit. We were up substantially more, but now we look at the MACD indicator. It's trying to cross and hook back up near the zero line. The 4-hour chart, we just got a fresh cross out here today. And when we look out on the 4-hour chart, what else do we see? Well, we have high volume right here in this gap. So if we start to see weakness, watch out. That could be a target location to the downside. On the 1-hour chart, MACD indicator well above the zero line. And we look, we've almost came up here, filling the gap that we had out here from last week. Now the question is, are we going to come down and fill this lower gap first? Or is that all she wrote and we're going to continue to rally on up higher? Keep in mind, we do have some economic news to contend with. Tomorrow, the Bank of England has their interest rate decision. Then we have the weekly unemployment claims at 8:30 a.m. 9:45, we have final manufacturing PMI. 10 a.m., we have ISM manufacturing PMI, ISM manufacturing prices. Then let's not forget, Friday is going to be very, very important. And the reason why I say this is we have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate. Jay Powell says they're going to focus on employment along with inflation. Now, we know that is all BS. If you listen to him, he basically read between the lines. He said Guess what, guys? Buckle up. We're getting ready to cut rates in September. No ifs, ands, or buts about it. I'm going to go ahead and say we're going to be slightly data dependent, but that is all BS in my opinion. We look at the S&P on the 30-minute chart. What do we see? Well, MACD indicator looks like it may want to start to curl back over. Now, if that's going to be the case, we have a D as in dog shaped profile with some selling with a big tail on the bottom, big tail on the top. Now, with a D-shaped profile, we expect a breakout or breakdown, but I'm actually going to classify this as a P as in Paul. Act like they're in this gap area. This is part of the profile. That would actually form a P as in Paul shaped profile. And if we do start breaking down below it, I would want to target the minus development area, which we spoke about in this morning's video, which is right above value area high from yesterday. Now, when we come over and look at the 4-hour chart, look what we did today. Boom, right through our structure breakdown point. I actually thought we might get a little reaction, which I'll show you on the 30-minute chart. We did get a reaction from this area. It just doesn't look like much on the 4-hour chart. You can see right now we've come where? Right up here towards gap resistance. And now we've started to reject back down. Now, I do think we will build calls and eventually we will come back up and fill the gap. Now, the question is, will it be tomorrow? Will it be Friday? Or will it be the following week? We can see straight off the lows, the S&P has rallied 155 points. And in this morning's video, what did we talk about? I said, if we are above value area high, we want to look for higher prices. If we dip below it, I want to target the point of control right here. We dip below it. However, that was all she wrote. And then the market rallied back up. So if you guys took the volume profile rotation on the way down today, well, it was just a case where the trade simply did not work out. Now, if you look coming into this minus development area, this is where I was talking about. We came into that structure breakdown point, and that doesn't look like much. But if we actually measure that out from the candle wick down here to the candle bottom, that was 19.25 points on a move down lower. And when we look at this out, I want you guys to pay attention. Look where the 50% retracement level is, 55.10. All right, this is going to be an area that I don't know that tomorrow we come back and test it, but I do think this is highly probable. Now, tonight, if we do go a little bit higher, we will have to grab our Fibonacci retracement tool and we will have to extend it up a bit. But right now, that's where that level is coming into play. Now, as we look at today's volume profile levels, look at value area high. It comes in at a price point of 55.71.50. The point of control will come in at 55.60.50, and value area low is going to come in at 55.39.50. Now, if indeed we are trading above value area high and we start coming back down, I want to target the point of control. I want to target value area low. I want to target all the way down here towards this minus development area within the profile. Now, that minus development area I am looking at will be about 55.06 down to about 54.98. So that'll be an area I would want to focus on, but do not hold your breath. I don't think it's highly probable that we're going to make it all the way down towards that level tomorrow. Now, if you guys would like to learn how to trade double bottoms like you see right here using order flow, watch this video right here.